Excuse me.
what would I pay to have the level of knowledge that I gained for that decade? Because it was
Mhm.
so amazing. Like you sit down with people and you say, okay, tell me about your finances. And like, well, I've got this real estate, I got this syndication. I've had it for
Yeah, yeah.
15 years. I've got this REIT. I've got all this stock. I've got these bonds. And you're like, crap about syndications. Tell me about this syndication. Like, I've never had this go. And they're like, well, here's the way it works. And you have that conversation like 30 times.
Yeah.
And you're like, okay,
Yeah.
is your syndication publicly or privately traded? Is your REIT publicly or privately traded? Did they surrender their redemption option in '08? Like, you really start to understand the nature of
And
the market.
Yeah.
And
And
so,
where people are trying to move their funds.
well, and how they have felt about that asset.
Welcome back to the Peep Podcast, folks, where we discuss the latest in REI tech, trends, and inspo. I'm going to be your host, MJ, and I'm so very excited to welcome Jeremy Watson to our show today. He is the co-founder and CEO of Bedrock Investment. So for anyone listening today, if you are interested in finding your next turnkey investment nationwide, your turnkey investment nationwide, then you need to tune in today because he's our guy. So without further ado, welcome to the show, Jeremy. How are you doing?
Thank you, MJ. I'm doing good. We're working really hard. It's an
Mhm.
interesting market, I think, for anybody in real estate.
Yep.
And we're still finding some deals. Like, we're finding deals every day that we like. I was just on a 2-hour call yesterday, kind of looking over what deals are coming out of Arkansas, what deals are
Okay.
coming out of Oklahoma, which markets we're kind of in love with right now, which ones kind of suck.
These are all
And
things that I want to talk to you about. But okay, so before we dive in, tell us more for those who aren't familiar with Bedrock. What do you guys do? What is the kind of mission and vision of your company?
yeah, so Bedrock was really born out of, I spent like my whole life has been in investing in real estate. Like, every single
Mhm.
book I have on my shelf is about real estate investment. And so since I was tiny, I've always started companies, mostly because I was orphaned when I was young. My mother passed away, and then I ended up getting disowned through some crazy stuff. But life is life, and sometimes life can be hard. And so I kind of had to figure it out, right? Because there was no safety net for me, really young. And so I started a bunch of companies to kind of put myself through college and this, that, and the other. But I ended up taking a stint off from entrepreneurship just because it can be relentless. Like, entrepreneurship can really be relentless. And I was like, okay, I'm just going to take a couple of years and recharge my batteries. So I spent a decade in financial advice. And in that financial advice decade, I sat down with a ton of clients in kind of Northern California, Southern California. That was my main markets. And and the same conversation happens all the time. You sit down with someone and you say, well, what's your assets? Like, what's going on in your life? What do you want to improve? And you just try to see if there's, like, within the products that you know and understand, if there's something that's suitable, right? And what I found over and over as I was having these conversations with people with like 4 million, 5 million, 6 million, $8 million of net worth, right?
Mhm.
And I was having the same conversation a lot, which is like, I'm kind of living on rice and beans.
Not what you'd
Like, I'm
expect.
having trouble paying for my kids' college. I'm worried
Yeah.
about extended care. I'm worried about, like, chronic care. I'm worried about disability. I can't afford disability insurance. And, like, I kept having that same conversation, like, hey, I'm kind of broke.
Broke. Mm-hmm.
And I was like, how are you broke? You have at least $4 million of real estate. Like, your
Yeah.
balance sheet is like you filled
Exactly.
out something at a conference, right? But, like,
Yeah.
there's no way you're broke. You're worth $8 million. How are you? This doesn't make sense, right?
Hmm.
And as I dug into it more and more, I realized that what was happening is really two problems, right? Number one, the oldest, greatest rule when it comes to real estate investment is the 1% rule. I think any operator worth their salt who has ever invested in anything real estate related ever in the history of the world kind of agrees. Like, I make the joke, Adam used the 1% rule when he did his first rental, right?
Hmm.
Sorry, it's a terrible joke, but, like, that's how old it is. It's like the classic, right?
Yeah.
And so the 1% rule is like, hey, if your property is worth 200 grand, it should rent for 2 grand,
Hmm.
right? If the property's worth 2 million, it should rent for 20 grand,
And this is
right?
regardless of what market you're in. This is
Regardless.
okay.
And it's
Hmm.
because the big math, like the first highest hopper of, is this even a deal worth considering,
Hmm.
makes sense at the 1% rule. Like, that, if I can buy it for 200 grand and I can rent it for 2 grand, right?
Hmm.
all the rest of the math will work.
Sure. Okay.
Right? It has to really go pear-shaped for the math not to pencil at that point, right? Now, that rule can be like flexible. Right now, you can't buy hardly anything in the entire market at the 1% rule. And so let's chop it in half. Let's say, okay, it's the 0.5% rule, right? Whatever. Like,
Yeah.
let's just make a bracket. Let's say you should be able to rent a $200,000 property for like between $1,000 and $2,000 a month. The higher, the better. That's not happening in Northern California. That's not happening in Southern California. In Northern California, I was routinely sitting down looking at a $2 million rental asset rented, right?
Mhm.
But
For how much?
$2 million, it should be rented for like $20,000, minimum $10,000.
Minimum. Yeah.
And it's rented for like $3,500, $4,000.
Oh.
And
Okay.
the reason for that's pretty straightforward. In Northern California, the people who are buying, I don't know if you've ever been in that market, but they apparently have infinite money. Like,
Mhm.
I don't know. There's a lot of foreign nationals. There's a lot of like $500,000 Google signing bonuses. There's a lot of reasons, but the people who are buying have infinite money. But the people who are renting still have 2 or 3 jobs,
Okay.
right? They don't have infinite money. And so the buyers have decoupled and sailed away into the crazy, where the renters are still just people trying to like, trying to put their lives together. And
Yeah.
maybe they need flexibility, but that's decoupled those two numbers fundamentally, right? And so what we did is we said, okay, you just need a 1031 exchange. There's no reason to like hold on to a garbage cash flow asset because you own it. Now, the reason that people refuse to sell in Northern California is because they bought this property for like 100 grand back in the 70s.
Okay. Yeah.
And now it's worth like 2 million. And so they've got like a $1.9 million taxable event if they sell.
Yeah. And they don't exactly.
And so they're going to have like
Yeah.
a federal cap gain of 20%,
Mhm.
state California income tax of 13.6%, an Obamacare transactional tax of 3.8%, and recaptured depreciation on anything that they've done of 25%. And so the reason they're waiting, like just holding on to these garbage assets, is they're waiting for death.
Mhm.
Because if they just hold on to it until they die, it steps up in basis and you can like avoid the taxes. That doesn't help them in retirement.
It doesn't help that. Yeah, exactly. Yeah. That money is, and those assets are not working for them while they're here. Yeah. Yeah.
For
yeah.
sure. And almost every conversation I was having was, I bought this asset for retirement. Like I bought this rental to pay my bills in retirement. I bought this rental to like pay some golf green fees and like to enjoy my life and to be passive. And what it's turned into is I'm changing a lot of toilets and I'm dealing with hassle-some renters. I'm in a non-landlord friendly state. I've got $4 million of balance sheet, but I'm living on rice and beans. And so the crazy thing is there are markets. Like we were looking at properties yesterday in Arkansas, kind of the Jonesboro, Bentonville area, kind of North Arkansas, kind of getting towards Memphis.
Okay.
We can buy actively there for 200 grand and it rents for 1,800 a month.
Amazing. Yeah.
And so
Almost at that one.
yeah, in our book, it's like, okay, well, let's just sell the $2 million garbage asset. Let's do a 1031 exchange. Let's avoid the capital gain, right? Completely. Let's push that.
Put it into something that can actually work and produce for us.
Correct. Let's go buy 8 properties at like $250 a piece, right? Yeah, that math works. Let's go buy 8 properties at $250 a piece, $2,000 a month of rent ish, and let's take your gross from like $4,000 a month to $16,000 a month, right?
Math.
Now, single family residential has like administrative hassles. I'll be honest, it's a headache. Like that's the
And
one
you guys primarily focus on single family, is that correct?
we exclusively do single family.
Okay, yeah, and I want to know. I mean, yeah, like tell us why, right? If there is that administrative hassle, why that versus multis versus other, asset classes that you could go into?
Yeah, so it's a great question. Like, well, Jeremy, you're a bright guy. Why not just do multifamily? And the truth is because to get into multifamily, you give up a lot. And I'm not saying you give up the moon, and I'm actually not saying that single family is better than multifamily in all situations, but there are categorically situations that multifamily isn't the right solution, right?
Yeah.
For example, if I get into a REIT or a syndication or a tenant in common or a DSC, Delaware Statutory Trust, in every single one of those, I am taking my money and I'm dumping it into a bucket, right?
Okay.
With other people's money.
I think I see where you're going. Yeah. Keep
And the
going.
operator, whoever's in charge of that multifamily or syndication or DST or whatever, the operator, I'm trusting that they do a good job, right?
Mhm.
And typically, because of the way those funds are structured, they're borrowing 20% to make the down payment on like a syndication, for example,
Mhm.
and they're borrowing another 20% to make property improvements and repairs and additions. Like syndications are usually buying like 350 unit complex, Class C neighborhood,
Mhm.
like Class B neighborhood, Class C condition, right? And they're going in and they're saying, okay, we're going to borrow $2 million to buy it, and then we're going to borrow another $2 million to fix it up, right?
Mhm.
Well, if that operator does not really know what they're doing and they blow through the $2 million fix up budget and they're not done yet,
Mhm.
then you got a capital call. Hey, we need another $2 million to fix this up. And it's like, well, do you guys really know what you're doing? Or like, am I $4 million
You're
into
gonna get another one of these calls?
yeah, like am I $4 million into kind of a hellscape from which there's no escape, right? And
Not great.
because
Yeah.
the asset is complicated, it's not like, hey, I don't think you guys know what you're doing. I'm going to just step in and I'm going to do this 450 unit renovation myself, right?
Mhm.
Or it's even more complicated than that. They're buying like mini malls, right?
Ooh.
And they're doing big tenant restoration, like we're going to turn the Sears into an apartment
Mhm.
complex.
Well,
Like,
there's just
okay,
more units, more people. There's just more moving parts. So to
correct.
manage all at once. So
Correct. And so
Mhm.
in all of those, your money is with other people's money.
Okay. Yeah.
In all of those, it is too complicated a product to just fix if it goes wrong,
Yeah.
right?
Well, you
In
can't. Yeah. You can't take care of it on your own.
in almost all of those, there's financing involved.
Mhm.
And so if we did our math wrong or if interest rates go through the roof, like there's a real chance in those assets that if it does not go well, the bank's going to take the asset back. They're going to take the
Yeah.
asset back with all the improvements, right? And you're going to lose the entire down payment
Oof.
and you're going to lose all the improvement money. Like the bank's just going to take the thing.
Yeah.
And you're going to be like,
Yeah.
well,
Not great.
guys, it's worth zero now because we don't need the asset anymore because we blew through our liquidity test. We blew through our asset test. We got into a stocky botcher's black mold situation. Like, and so number one, like they're accredited investor only product for a reason, right? It's
Sure.
because they
Okay.
can be enormously higher risk than they are sold
Mhm.
as. And it all comes down to the operator and the operator's experience, and do they really know what they're doing? And did the market
Yeah.
go in the period of time? Like they're you can't even touch them unless you're an accredited investor, right?
Yeah.
Because of
Which
the
is a huge barrier of entry to most,
correct.
right?
And because of the complicated and the appropriate product
Mm-hmm.
and the commingled nature of the funds.
Yeah. Yep. Not great.
And
Limiting, to say
you
the
don't
least.
control how long you're in the product. They say 5 to 7 years, right?
Mm-hmm.
But it might not be the right time to sell in 5 to 7 years. You can't sell
You
it
never know.
yourself. Like they have to decide to sell it.
Mhm.
You don't control the financing. I can't go out and get a line of credit on the thing because I'm in this commingled thing with everyone else, right?
Sure.
I can't go out and get a cash out refinance if my financial situation changed and pull my equity out. I'm in this commingled thing with all these other people. I don't control
Yeah.
the financing. I don't control the timetable. I don't control the asset. I don't control the renovate. You give up a absolute boatload of control
Okay.
for more passivity and maybe a slightly higher return.
So is it worth it? Is
Well,
it worth it?
and the answer is maybe,
And it
right?
could
Like,
be for some. That's the thing.
correct.
But
Like,
maybe
if you're
not.
okay with those risks and you like your operator and you've
Yeah.
got people you really like, I like a lot of people in multifamily.
Mm-hmm.
That's
Okay.
just not where I decided to build my career, right? And so what we do instead is we say, okay, you come to us, you come to Bedrock, right? We'll show you properties in like Oklahoma and Charlotte and Florida, and
Yeah.
we'll show you our 5-6 markets where we're currently buying every day.
Okay.
You bring 250 grand, you will buy the property yourself, you will own the property yourself, you will control the financing yourself, you will control the admin yourself, and in all candor, single family residential rentals are not dang rocket science, right? There's like one revenue line, there's 5 expense lines. If you have a property manager, anyone can step in. If I do a bad enough job, you can be like, nah, I want to do this myself, right? If the way I do the job, you're like, I actually want more of this or more of that, like I want the stew to taste different, you can actually step in and say, I'm going to take over this property. You own it yourself. Cool.
That's great.
Jeremy, tell your story walking.
Mm-hmm.
Like this, I'm going to take it over. And it's a simple enough asset that anyone can take over single family residential. Does that make sense?
Mhm.
So number one, it's a lot less complicated.
That's great.
Number two, people can own it outright, right?
Yeah.
They can buy it cash or leveraged. Any bank in the country will lend to you if you've got good credit to buy a single family residential. Any bank in the country will say, hey, you've got good credit, you've got good income, you're going to do an 80-20 loan, lend on it, right?
You can do
And so
this.
you can
Yeah.
control,
Finance.
correct, you can control your financing.
Yeah.
I want a HELOC on it, right? I just want to have all my
Mhm.
money accessible if the day comes, right?
Yeah.
I want to do a 50-50 mortgage. I want to do an 80-20 mortgage. I want to do a 70-30 mortgage. I can decide exactly how much of my capital I want in if things change down the line. And I'm like, I thought I wanted all cash, but based on the returns you're showing me, I think I want some leverage. You can go out and put financing on after the fact, right?
Yeah. Yeah. Yeah.
And then beyond all that, it's way easier to inherit.
Mm-hmm.
Like,
Okay.
hey, mom left me fractional ownership of a
Of this,
syndication
yeah.
that's 1 year into a 7 maybe year build. Like,
Sure.
I don't know if I'm on a capital call because mom got involved with syndication and it sounds like it's all going to hell. Like, do I'm going to put more capital? Okay, I got to sell mama's house because this capital call says they're out of money because they ran into black mold. Right? Like, oh, we're into something that I don't understand at all. Right?
And now we have to talk to all these other shareholders, stockholders, people that are invested in this as well to even make a move or consider, right, what we want to do. So,
Right. Whereas if
much more.
whereas on the other end, let's just say mama keeps the house in San Mateo, right?
Okay.
And she just says, okay, I'm going to keep the house in San Mateo and my kids are going to inherit it. Let's say there's 3 kids, Timmy, Johnny, and Jill, right?
Right.
Well, the moment that mama passes away, Timmy, Johnny, and Jill are going to inherit at a step-up basis. Okay, it's worth $2 million. You don't have to pay any taxes. Just sell it for $2 million, right?
Mm-hmm.
Well, Johnny wants to hold on to the house because it turns out it was mama's old house. She lived there and that's where we were all born. And she
And
turned it into a
yeah.
rental over time. Like, I want to hold on to the $2 million house. And Johnny and Jill are both like, no,
Mm-hmm.
we'd much rather have the $800,000, $700,000, right? Like, sell the thing. Like, we're both doing our careers. We're at the time in our lives. We'd much rather have the money. And Johnny and Jill, Jimmy's like, no, I'm the one who's going to make this call. It creates this rift, right?
Yeah.
Much more than that, I would rather say, okay, Nancy, the lady who we're working with, let's sell the house. Let's go buy 9 properties in, Oklahoma City,
Divvy it up.
Arkansas, Charlotte. Jimmy gets the 3 in Arkansas. Johnny gets the 3 in Charlotte. Jill gets the 3 in Florida or whatever crap, right? Let's make a really clear estate plan. The moment you pass away, it's still going to step up in basis, right? We're going to fix your cash flow while you've got it. We're going to go from 4,000 to 16,000 while you got it. But the bottom line is the moment you pass away, if Jimmy wants to hold these properties forever, he can with his 3.
Yeah.
He can call Bedrock. Hey, here's your properties. Here's your statements. Here's your history. Here's all the statements. Here's all the annual reviews. Here's your tax prep documents. If you want to keep us on, we're happy to stay on. If you want to take over management by yourself, we're happy to do that.
Yeah.
If you want us to arrange sales of the properties, we'll give you some good advice and do that,
Yeah.
right? Like, clean. Jimmy, Johnny, Jill. Jill says, I do want to sell mine.
Yeah.
Like, I want out. And we say, hey, just so you know, you've got these tenants in place. So it's way easier to inherit, right?
Sure.
And then let's take the next piece of the equation. Let's say Nancy, the owner, says, well, I don't have enough money. Like, eventually I'm going to move into extended care. Like, eventually I'm going to have to pay a $250,000 retainer for an extended care, right? And eventually the only money in my life that I really can come up with $250,000 to move into assisted living, eventually I have to sell this $2 million house.
It's locked up here. Yeah.
Right? Because if it's rented for $3,500 a month, she's not even going to qualify for a mortgage on $2 million, right? She's not. Like, I've had clients who came to us this same situation that I'm telling you right now.
That's
where
sad. It's heartbreaking to hear, right? Like these.
and it's wild too, because it's like $2 million should be a retirement-ish.
Yeah.
It can't just sit there and do nothing.
Mm-hmm.
Like, I've built enough companies that I know how hard I work to create a return. And watching hundreds of billions of dollars sit in Northern California and just languish, doing nothing, lazy, really.
Yeah.
I'm just like, oh.
Yeah. That's
And so,
rough.
so there's that last piece, which is long-term care disability planning, right?
Mhm.
If you ever get to the point because your finances are such that you have to sell the $2 million asset, then you're going to have a single year
Mhm.
windfall tax event. It's the worst tax planning you can have.
Mm. Yeah.
Whereas if you pre-plan that a little bit, you can say, okay, I'm going to take my $4,000 of rent to $16,000. I'm going to fix my cash flow while I'm alive. I'm
Mhm.
going to go buy 8 properties in good markets that are well vetted. I'm going to let Bedrock take care of the day to day. I'm going to have way more net income, right?
Mhm.
And when the day comes that I have to liquidate 250,000, I'm going to sell one of
Mhm.
my 8.
I don't have to. Yeah, exactly.
And I'm going to create a $250,000 taxable event,
Mhm.
not a $2 million
Mhm.
taxable event. Maybe I can get out of this whole thing at the 15% federal rate.
Yeah.
Maybe each year as I sell my assets, I could actually keep my federal rate instead of going all the way to 39.6.
Mhm.
Maybe I can get out of it all at the 22% rate, right?
Yeah.
Maybe I can save myself 50% of my tax burden. And then a year or two later, I'll sell another one.
Yeah.
And then a year or two later, I'll sell another one. So I'm breaking up my taxable event.
Mhm.
And so what I'm saying is, it's not that single family residential is better. And it's not that multifamily, DST, syndication,
Mhm.
tenant common is worse, right? I'm saying they each have different strengths and weaknesses.
And strategies that you pursue. Yeah.
Correct. And in
Yeah.
my book, I said there's a lot of players out there in multifamily. There's no one doing single family the way that I want it done, which is if it does not perform, I don't get paid. Like that's what I want. I want
Mhm.
someone who's looking at the property to say, hey, if this thing doesn't perform, they don't get paid. Not passing off bull crap and charging me
Mhm.
$5,000 to put a grenade in my portfolio that if I had
Yeah.
known better, I
That
never
sinks
would.
you and yeah, ties you up or locks you in for maybe years. Yeah.
Yeah.
So what
Yeah, that's how I ended up in single family.
No, I love that. It's super helpful to hear. And I mean, I want to know, so you had mentioned or alluded to a few times, there's a couple of key markets you guys invest in, right?
Correct.
What are some of those 5 or 6 markets?
So we're buying right now really actively in Ocala, Florida, which is just north of Orlando.
Okay.
We're buying really actively in Bentonville, Arkansas, and Bentonville, Arkansas, Jonesboro, Arkansas, kind of North Arkansas.
Hmm.
We're buying somewhat in Oklahoma City, less than I thought, because the
Okay.
inventory has gotten a little
Worth
old and
noting.
stale and expensive there.
Okay.
I love North Memphis, like Cordova.
Mm.
I'd buy everything in Cordova I can get my hands on. Um, but Jonesboro, Arkansas, right now, based on the numbers we were looking at yesterday, is like really strong.
Okay.
Like really strong. The job market's diversified. The purchase prices are really strong. It reminds me of Memphis 6-7 years ago, and we
Mm.
bought a whole ton of stuff in Memphis that has gone through the roof.
That's
And
great.
so
Okay.
right now, like Arkansas, Charlotte. We're buying a lot of stuff north of Charlotte, kind of Salisbury,
Okay.
Charlotte, North Carolina. So yeah, Memphis, Charlotte, Florida, Arkansas, Oklahoma City. We were buying 2-3 years ago in Indianapolis,
Okay.
and we've just stopped. Like we were buying in 2011, 12, and 13 really heavily in Phoenix and in
Hmm.
Vegas. But truth is, every market has a life cycle.
And it has its season. Yeah.
Correct. And really, if you're looking at the 1% rule as the hot and heavy, the rule that you're following kind of period,
Mhm.
there are markets that you can buy in and then they get expensive. They appreciate like crazy and the rents don't keep up. And you're like,
Yep.
okay,
Okay.
the benefit of Bedrock is we're just always looking for another good market where we can
Yeah.
buy 50 to 100 properties.
No, I love that. You guys are actually like parsing through the data to see where, you know, money is best, where you get the best returns really, right? And what would you say, through the eyes of Bedrock, what makes a property turnkey? So for someone who's listening who's like, "Hey, I want to get into real estate. These guys, it seems like they could really hold my hand through this, help me get my first single family. I have some funds." Um what what is a turnkey property for you guys so that you know, our audience can kind of feel assured, hey, there's not much that I got to do here.
But, we have tried almost everything, if I'm
Okay.
perfectly honest. We've bought a bunch of stuff. We've bought duplexes and fourplexes, and we've
Mhm.
bought single family, we've bought condos, we've bought big houses, we've bought small houses. And at the end of the day, at Bedrock, our team's done like over 5,000 houses now.
That's great. Yeah.
And at this point, we do the same thing over and over. We're like McDonald's. We do the same house over and over. Every single house we're going to buy ever
Mm.
is going to be 12 to 2,400 square feet. It's going to be
Okay.
1980s or newer. It's going to be 3-bedroom, 2-bath, or 4-bedroom, 2-bath. Preferably, we're going to have a garage, not a carport.
Mhm.
We're not looking for like chain link fences and carports on street parking neighborhoods. We're looking for like Class A and Class B residential.
Okay.
Because effectively, what we want, and this is one of the things that I keep internally, I do not want to take these houses off the market forever, right? I do not want to deplete housing stock systemically forever. Our hold time in our contract with Bedrock is usually 5 to 7 years. But when we exit, we do not want our only option to sell these houses to be a professional investor who's like,
Mm.
hey, I want the screamingest deal that ever did
Sure.
scream. I want 70 cents on the dollar. I'm not buying it, right? We want our exit to be this house goes back onto the market and back into the population, right?
Mhm.
We want our exit, our house to be the maximum number of renters and the maximum number of first time home buyers, right? So that when we're done with our 5 to 7 years, we can sell it back into the market and a first time home buyer can go get good financing and
Mhm.
they can be the one that uses the house long term.
Yeah, it's lovely.
Because
Good on you guys. Yeah.
you can get much more of a market rate
Mhm.
when you're willing to say, hey, this is going back into the market. It's not like there are neighborhoods that are just rentals.
Mhm.
We don't
Yeah.
want we don't want 100% rentals in our neighborhood because
Mhm.
people have a pride of ownership. That's why that phrase exists.
Mhm.
You want a neighborhood to be like 70%
I was
owned.
gonna say, yeah, at least like 60, 70. Yeah. Because it feels like it's its own neighborhood. People take pride in that. There's ownership, there's agency, and there's more buy-in. Yeah.
And in all candor,
Mhm.
there have been like valleys and peaks in my career.
Mhm.
There have been times where me and my wife rented, many times.
Mhm.
And in those neighborhoods where most people were owning and we were the renter that just happened to be there for a while, we took better care of the property. We took better care of like we mowed the lawn. Like you
Yeah.
didn't want to be the renter who was like, hey, your house looks like garbage.
Yeah.
Right?
Yeah.
Like
Yeah.
you obviously do not care. It's like, no, we wanted to be good members of the community. And,
Sure.
so, but and my wife's kind of picky, but like in the places that are 100% rental,
Mhm.
those really get those really get tough because people just don't treat them like they own them, and that can really represent in the way the neighborhood feels after a while.
Yeah, and what's reflected, even just yeah, externally.
Yes,
Yeah.
we're giving you the list.
Mhm.
So Class A, Class B neighborhood, good schools, all kind of that's our list. And so
Okay.
effectively, Bedrock runs a team
Mhm.
of finders and realtors and rehabbers in those markets where we're buying. And
Okay.
those people know if it fits in this box, Bedrock will buy it,
Okay.
period.
Mhm.
And so they know that I have buyers who are looking for that style rental. And they
Mhm.
know that I have property managers that know how to run properties. And they know that if they have the property that fits our bill, we'll buy it.
Yeah. Okay. No, that's great. I love that, and it is insightful to hear, especially for any listeners out there who have some funds sitting around and are looking to do something with it. I mean, the other question I want to ask you, Jeremy, you've started what like 20 plus, close to 25 companies. Is that
Yeah,
correct?
depending on how you count. Like, I tried to count it up with my wife the other day.
Yeah.
Like, how many have you started? And we tried to count it up somewhere between 20 and 30 because
Okay.
I was like a early stage founder in some. Like, we launched a cryptocurrency
Hmm.
back in 2017 that barely came off the ground. And then we realized like there was going to be security and regulatory reform that was going to
Hmm.
tie us in legal knots for a decade. And so we just refunded everything, but we pulled in like $3 million in 24 hours on that.
Wow.
Um, like there's so many different things I've done
Yeah.
over the years, but really like companies that have grown and companies that I've either sold or stopped for reasons, I'd say like 15 to 17. But
Okay.
companies that I was involved in early stage and really did a primary role in getting them launched or getting them financed or probably another 15 to 17 on top of that. So depending on how you count, I'd say between 20 and 30.
Okay. Well, I want to ask you, but between all of them, when you kind of reflect back on, right, like being an entrepreneur at your level, what's one of the hardest lessons that you picked up along the way, if you don't mind sharing?
You're flying without a net.
Yeah.
To be an entrepreneur and play the game that I have decided to play for whatever reason, right?
Hmm.
In all candor, it's because I get bored easily and I like the ability to like specialize in what I specialize in, which is
Hmm.
startup and then hire, right?
Yeah.
Um, but you're playing without a net. when you're an entrepreneur, you have all the freedom of working where you want, when you want, how you want, working for who you want, working on the projects you want. You have all the entrepreneurial freedoms that people like talk up, and that people like all the stars in your mind, like, oh, it's going to be one, right? But you have to realize that you do not have the proven infrastructure of a company that's been around for 7 years, that's got product offerings and marketing in place that already work, that know what their acquisition cost of their customer already is, that already have HR, that already have a healthcare plan, that already have
system
that already have
infrastructure.
401k contributions, that have already figured out, hey, we're making enough money to kind of deal with all of this crap on the back end. They already have legal and compliance. Like, as an entrepreneur, yeah, maybe it'll go great, and maybe you'll end up with more money than other people, and maybe you'll get to do the things you love, but it's just as real, maybe even more real of a possibility that a 2008 hits and you lose all your real. You have to sell everything at like rock bottom prices. You get the shirt torn right off your back, and you're looking like every day at, hey, for the last decade, I've been building something that's not going to work. And I don't have health insurance, and never haven't for the last 10 years. And I don't have a 401k, and don't have them for the next year. And I'm not making qualifying contributions to Social Security because I'm an entrepreneur and I'm living on rice and beans. And so the biggest thing I would say, like, the entrepreneurs need to know, and I talk about this all the time on my YouTube channel, is it is an incredible game that you are playing without a net. Like, no support. And the truth is, even if you go out to the SBA and you get like SBA funding, if that business goes into the ground, you do not qualify for SBA funding for 7 more years.
Yeah.
And so, like, it can really take you out of the entrepreneurial game. And so, like, I've had those experiences. 2006, we started a real estate rehabbing wholesaling company. We thought we had the world by the tail. Right.
With 06?
Yeah.
Yeah.
Like, it was going great.
Yep.
We thought we had it. And then 2008 comes along, and it's like, hey, there's no buyers. We've got all these projects. Things aren't going up in value. Things are going down in value. Like, you don't have the remark. There's the old saying, the market can remain irrational longer than you can remain solvent.
Yeah.
Right.
Yeah.
And it's like,
100%.
And so we didn't bankrupt. We didn't foreclose. Like, we got out of everything, but it just took every penny. And after that, my wife's like, hey, we need to maybe make a change. Maybe go work for a bigger company, take a break.
Yeah. We don't want to find ourselves in this necessarily.
Well, and we were exhausted. We were so tired of, like, holy cow, that was a lot of work. And so as an entrepreneur, that's the warning I would give. For every one Elon Musk, there's 30 million entrepreneurs who just couldn't get their businesses off the ground, or whose businesses just blew up for whatever reason. Like, it is a high risk, high reward game playing without a net. Now, if it goes well, it goes very, very well. But that's what I try to help people understand. It is a high risk, high reward game.
Yeah. And aside from accepting that kind of as a fundamental, right? If you're going to step into entrepreneurship, what are some things you've done to kind of set yourself up for success, knowing that you're operating without a net? You've launched so many businesses and been a part of so many different ventures. It's neat. You have a unique perspective, I feel. So is it surrounding yourself with the right people? Is it not surrounding yourself with too many, until a certain point? Is it leaning on certain systems, processes, to kind of optimize and scale? Like, what are some things that kind of come to mind?
There's a chart that floats around online, and it has like beginner, and it has 5 dots, like fail, like red dot, red dot, red dot, green dot, green dot, like 3 failures, 2 successes. And then it's like pro, and it has 3 lines of those dots, right? Like a ton of red dots.
Yeah.
And then towards the very end, it's like red dot, green dot, green dot, green dot, green dot. And towards the end, it's like, okay, this guy hits nothing, but nothing, like shoots nothing.
Yeah.
Right? And the thing that goes wrong with that is a pro has failed more times than a beginner has tried. And the truth is, in college, I ran an e-commerce retail arbitrage business. I would recommend to this day that, like, my son run one of these companies, because it's amazing. Like, I sold hundreds of thousands of stuff on eBay and Amazon in college to put myself through college. And in that business, I learned like all the important things around like, shipping and margins and margin compression and, the value of brand and, manufacturing in China. And I really figured out like a lot of the pieces of things that I would carry into the future. Like, hey, Bedrock has to have these margins because if you don't have these margins, you can't afford 401ks. If you don't have these margins, you can't afford health insurance. If you don't have these margins, you can't afford marketing, right?
Yeah.
And so like every single company I've ever started has taught me something that either it worked or it didn't work, right? And in the future, you just see that really early. You're like, dude, these margins
Yeah.
suck.
Yeah.
What
The indicators there. Yeah. You can identify.
Yeah.
Mhm.
And so now I do a little bit of consulting. Like people who know me will call and they'll like, hey, what do you think, man?
Mhm.
And after you've done 15, 20, 30 companies, you get to a place where you can give some dang good advice. Like I had a good friend call me the other day. He bought a concrete company, right? For like 1.8 million, $1.8 million note was the financing. Like, and he's just like, not profitable right now.
Mhm.
And we were having this long conversation around like, okay, why are you not profitable? And after he kind of told me all the pieces, I said, here's the question you have to ask yourself. Are you in a business where there are not margins? Because everyone who you're competing against is like living in a trailer park and like not paying their people, not paying 401ks. Like, are you competing with people who do not make money?
Yeah.
Right? We've met those people. Like you've got rock bottom expenses and you are charging rock bottom rates. I'm not
Yeah.
trying to diss on trailer parks, but I'm saying
But
there is a
yeah.
way to live that your expenses are just rock bottom. Does that make sense?
Yeah. And can you compete with that? Is that
Correct.
even possible?
Is that the barriers of entry you're in? Is anyone who's slinging the crete and like making no money, is that your permanent competition? Right? Or number two, because you're new to this business, are you making mistakes
Sure.
that you can improve
And
on
you have
and
to
like
just pivot.
figure out? And I said, based on our conversation today, I think it's both.
Okay.
I think there is a low barrier to entry to sling in the crete. And so you got to either get in, like more into commercial or more into high end residential. And you need to work on your networking with like GCs who you can actually bid a realistic job. And number two, you're making mistakes because you're new at it. Just don't make those mistakes again. But I said, stop bidding anything. If you cannot make a proper margin, you do not want the job. Because he's like, my guys are working like crazy and I just lost hundreds of thousands. And I was like, that's unsustainable.
Yeah. You don't.
Right.
Yeah.
And you can't just be slinging the crete until you run out of money, right?
I mean, slinging the crete. That's what I'm going to be left with today, Jeremy. That's the one thing that's really going to.
I was just trying to help you understand. Like, I don't think that's the way they talk, but like, are you just slinging the crete out there with your broken down truck and like so yeah, are there margins? And so all those things are things you learn over time, starting business after business after business. And the bottom line is it doesn't take that much success in entrepreneurship to be worth millions. You have to hit one run.
And then keep it going,
Correct.
keep it going. Yeah. Yeah.
And so like the 10 years I spent in financial advice was great for me.
I mean, I'm sure that just gave you so much like in-depth, right, understanding of how people are managing their money. What are some of the pitfalls? What are some of the mistakes? Some of the good things to do. And just seeing where people kind of like the psychology behind it too.
Absolutely. Like what
Right.
would I pay to okay.
Excuse me.
What would I pay to have the level of knowledge that I gained for that decade? Because it was so amazing. Like you sit down with people and you say, okay, tell me about your finances. And like, well, I've got this real estate, I got this syndication. I've had it for 15 years. I've got this REIT. I've got all this stock. I've got these bonds. And you're like, crap about syndications. Tell me about the syndication. Like, I've never had this go. And they're like, well, here's the way it works. And you have that conversation like 30 times.
Yeah.
And you're like, okay, is your syndication publicly or privately traded? Is your REIT publicly or privately traded? Did they surrender their redemption option in '08? Like you really start to understand the nature of the market.
Yeah.
And
And
so
where people are trying to move their funds.
well, and how they have felt about that asset for
Uh-huh.
15, 20, 30, 40 years, right? Like you've had this REIT for 15 years. How do you like it? And they're like, I hate it. I wish I can get out of it. It's been nothing but capital calls and bad, And so like, it really taught me what isn't working in the market. which no like noob investor's ever gonna know. Like you're never gonna realize that a syndication was a huge mistake until you are on the end of losing it all, right?
And that's what I love about Bedrock is that you're trying to avoid that for investors, right?
Yeah.
You put them in these positions where like, thinking about your buddy slinging the Crete, where you're going to get at least that 1% back.
Yeah.
That return is, and then it could be more. There could be room for growth from there, but at the very minimum, your baselines are covered and then some. So, as we were saying, I mean, there's quite a few different things Bedrock is really, advising people with. I just want to, just so everyone's clear who's listening, tell us the full range of services. So you guys are finding investors or those who want to, find these turnkey investments. You're finding the properties in these different markets you mentioned. You mentioned property management as well. And then,
So
yeah.
let's define that by the problems, right?
Mhm.
Because I think if we look at what the problems are, we'll understand really quickly like what solutions we're trying to solve, right? Number one, if I live in Northern California and I've got this $2 million asset that's hot trash, right?
Mhm. Yep.
I need a 1031 exchange in order to fix my cash flow, right? I can either give that to a syndication or give that to a REIT
Mhm.
and I lose all the control, all that stuff we talked about earlier, right? Or I can buy single family residential. Now, everyone's first response is going to be like, okay, I'm just going to sell the house and I'm going to go buy some other houses. The problem is real estate is regional. If your house sucks in San Francisco, your new house in San Mateo is going to suck just the same, right?
Mhm.
It's going to be almost the same purchase price. It's going to be almost the same rent.
Yeah. Why would you make a lateral move?
Yeah,
Mhm.
and for another house you don't know, right? Like
Yeah.
at least you know the demon you've got. Like, yeah, I replaced that
Mhm.
toilet last year. I shouldn't have to replace that toilet again for a while,
Yeah.
right? So what you actually have to do what we do is you have to be looking outside of your market. You have to be able to go and buy in Oklahoma City,
Mhm.
right? You have to be able to go
Yeah.
buy in Arkansas. You have to be able to go and buy in Charlotte. Problem is, if you got a $2 million 1031 exchange, which is really the problem I built Bedrock to solve, right? A $2 million 1031 exchange, you got to buy 8 properties. But in a 1031 exchange, you have to identify all of these properties within
Within.
45 days of
Mhm.
close.
Yeah.
And so what that means is you've got to have enough talent or energy or whatever,
Mhm.
right? To say,
Or
I'm going to sell this
connections. Yeah.
property and I'm
Mhm.
going to go buy 8 properties in Oklahoma City all at once, right? The
Mhm.
problem is good real estate doesn't just sit there on the market. There's not a good real estate fairy
Waiting.
that's like, here's my stack of awesome cash flow and rental real estate that no one else is going to touch, right?
Wouldn't that be lovely though if it did?
It does
Yeah.
not work like that. And so what it means is, and real estate's a horrible inventory product, right? If
Mhm.
I just said, okay, I'm going to run a fund for Bedrock, I'm going to buy every good asset I find and I'm going to warehouse it and just rent it myself until someone comes along, well, then you're not paying $100 for the real estate. You're paying the 100% purchase price for the real estate plus my closing costs,
Yeah.
right?
Mhm.
6 or 7% ish, something 5 to 7% closing costs. So you're paying 107%, but then you're having to buy the house and you're going to have to get your own title policy. You're going to have to pay your own closing, your own recording, your own stamps, right? And so
Yeah.
you're going to pay another 4 to 7% in your closing costs. And so what would have cost you 104% open market is now
Mhm.
costing you 108 or 110% because
Yeah.
I warehoused it, right? And so really the only way to do this is just in time, where we always have deals coming through, right? Where we're
Yeah.
always
There's a
looking at
continuous
deals.
pipeline.
Correct. And where we're just making offers. You'll get nice and comfortable with us. You'll get us pre-qualified
Mhm.
and we'll just start showing you deals as they come
Mhm.
across. Because if it's a really good deal, it won't last.
Yeah.
We'll put in an offer. 5 other people will put in an offer. Maybe we'll get it. Maybe we won't.
Mhm.
Right. So that's
Well, and I just have to ask a clarifying question here, Jeremy. That's the problem you started Bedrock to solve, but do you also work with clients who don't have an existing asset, but they have the funds? And then if so, what is the, I guess, minimum amount of, equity or funds they need to have to get started with you all?
That's an awesome question.
Mhm.
The beautiful thing and the reason we built it is like, hey, I've got a problem I can solve and we can make hundreds of millions, right? And if you just want to get involved in real estate,
Yeah.
my solution works for that too,
Okay.
right? Like I can buy 8 houses or I can buy 1 house. Either way, it's the same to me. We're doing the same find, vet, buy process. We're using the same real estate agents, the same closing attorneys. We're using the same lenders. We're using the same self-directed IRA custodians. Like, I can help a person buy a house, or I can help someone buy 36 houses in the biggest, most complicated single-family residential 1031 known to man, which we have done, right? One house is just nothing on the grand scheme of what Bedrock does. And we love bringing in those new investors also who are like, hey, I've always wanted to be involved, but I don't want this to be a full-time job.
Source and vet. Yeah.
Right. And I don't want to spend my whole time like talking to agents in Oklahoma City, trying to figure out which Oklahoma City sub-market is a good market and which one is total hot garbage. Right. And so Bedrock, the first thing we solve is helping people find, vet, and buy. Right. The problem with that product is there's a lot of companies out there that find, vet, and buy. There's Real Wealth Network, there's Done For You, there's Chris Crone, there's just a bunch. I can name like 5 or 6, 7 off the top of my head, right?
Yeah.
The problem with that is sometimes the properties are vetted atrociously poorly, right? And you're buying, it happened to my client when I was in financial advice. I had a client who bought a property from Rich Uncles, which is a big turnkey house out in Northern California. He bought from Rich Uncles, and they're like, hey, it's $53,000 in Detroit.
You were mentioning this. Yeah.
And it's going to rent for $900 a month. Now, if you can get $900 a month for 53 grand of all-in investment, like, my hat's off to you, man. Like, you get to get inducted directly into the Real Estate Hall of Fame. Like, I will, they'll build statues to your honor and sing songs to your glory. Like,
it'll be wonderful. However, what cost did that come at? And has your client even recovered yet from the trauma?
Yes and yes and no and no.
Yeah.
So I tried to be supportive. I was like, have you already bought it? Please tell me you have. And he's like, I've already bought it. I was like, I hope it's great. I hope that's so good. So great.
I'll switch to this other script.
Yeah. So for 2 years, he and I chatted about that while we did other financial advice stuff. He had to evict that property 4 times in 2 years. He could not get a good renter. He could not get a stable renter. The whole block was like burnt out in Detroit. Eventually, luckily for him, after having to fly out to Detroit just over and over and over and deal with this garbage that he had bought from a reputable turnkey house, right? Luckily, the house burned to the ground. And so the insurance company paid him $88,000. And I was like, are you going to rebuild? He was like, oh, no. I'll just hold on to the money, never again. I was like, well, are you going to buy another house from Rich Uncles? And he was like, absolutely not.
Yeah.
Like, effectively, it was a nightmare from which he could not escape.
Yeah.
And so that's one of the problems, right? One of the problems is, okay, there are good houses out there. How do you know they're vetted well? The other problem is admin. Like, people, these turnkey houses out there, which I'm one of, right? Bedrock's a turnkey house. They all act like, hey, if you hire a good property manager, they'll take care of everything. And that could not be more false if you tried. Like, anyone who's ever uttered those words, it's a lie the moment you said it. If you don't know it's a lie, you shouldn't be in this business, right? Because there's things that no property manager does, right? Property managers are not going to pay your mortgage. Property managers are not going to pay your HOA dues. Property managers are not going to set up an LLC for you or keep it in compliance so you don't get your A suit off. Right? Property managers are not going to keep themselves honest, and it is an industry that is rife with dishonesty. And like, just imagine you have a GC who you're signing up for a service, who you're only paying $100 a month, and you're counting on major service to come out of that GC. GC property manager, very similar feel when you get to the actual dealing with them. And we have seen like a $3,500 sprinkler system get installed, only to go in and double check, and they billed us, and they never installed the dang thing. They soaked us for the bill. We have seen portfolios go from 30 to 40% positive cash flow. And when we moved to a property manager, they went to negative, like 200% cash flow within 6 months, because every single bill was like $50 to change a light bulb, $150 trip fee. And so, like, property management, is rife with both incompetence and corruption. We tell everyone, like, property managers are great as long as they can be watched like a rat in a cage, right? You have to keep your
Yeah, there has
property
to be some
managers honest.
oversight.
And
Mm-hmm.
no
Mm-hmm.
property manager is doing their own oversight. And like, we've had property managers have clients move out in the middle of the night and they didn't tell us for 4 months, and they wouldn't return phone calls for months. We've had property managers who have fumbled evictions so that we've had to
Wow.
refile an eviction 2 more times. We've had property managers get an eviction judgment or a settlement at an eviction court and then not be able to get the check out of the court for 2, 3, 4 months. And it's
Mm-hmm.
like, each of those times Bedrock steps in, right? And we do that for our clients because we offer what we call a business management contract, which is like, hey, we'll take care of the LLC setup and the compliance. We'll take care of the bookkeeping and the accounting.
Yeah.
We'll turn your property manager's chicken scratch statements
Into
spat out of some hell software that doesn't make any sense, that breaks all the expenses into a fractional monthly, whatever the crap. Like,
yeah.
what is that? Like,
Yeah.
you're not going to have to pay your accountant $150 a month to go review 12 months of property management statements that wouldn't make sense to anybody. Like,
Mm-hmm.
and so like we do all that work, and then we say, hey, if the property's not profitable, we'll waive our fee.
Hmm. Okay.
And so we charge a fee that says we will do all the work, but if the
Mm-hmm.
property isn't profitable, we'll waive our fee. And the way we really make our money long term is a little bit of the appreciation, right? And so that takes us back to the first problem. I'm never going to sell a piece of garbage in the middle of the Detroit
Mm-hmm.
ghetto because it's not going to be profitable. And under my contract, I'm going to do a ton of work for free.
Yeah.
And that's a
Yeah.
great way to go out of business,
It doesn't
right?
behoove anyone. Yeah. 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 Mm-hmm.
Also, I'm not going to sell a piece of garbage in the Detroit ghetto because my money, my profit really is a little piece of the appreciation.
Mm-hmm.
And that's never going to appreciate.
Yeah.
Right. And so when I set it up, my favorite mutual fund companies that I ever worked with were like, if we
Mm-hmm.
don't get you a profit, we waive our fee. I love that model. Like, they're going to put
Mm-hmm.
their hand right into the machine alongside mine.
Yeah.
I get munched, they get munched. Right.
Yeah.
And I love that model when we started Bedrock. And I just said, hey,
Mm-hmm.
there's a way to handcuff yourself and force yourself to vet properties well. There's a
Yeah.
way to go that extra step and hop on Google Maps and look at the neighborhood. There's a way to go the extra step and hop on
It's if
Zillow.
your
Look at
success
the
is
rules.
tied in with your client's success, right?
Correct.
That's the only way to be invested and to be in it together.
Correct. And there are
Mhm.
times when it goes bad. Like, hey, a pipe bust in the ceiling, it flooded out the main wall, it's a $40,000 repair. We're on the phone with insurance. We've now dealt with our fifth State Farm adjuster. We're getting the runaround, right? There are times when it goes bad, but it will never go bad on a Bedrock property and you just feel like you've been left in the cold and told to lie
Sure.
and sold a piece of garbage. Does that make
No.
sense?
Yeah, 100%. And I think that's what a lot of people are looking for. I mean, real estate, investment, REI, this, that, single family, turnkey. There's all these terms that are thrown out there. So many people want to get involved and start their journey. So I think Bedrock really is such a valuable resource. So for folks who are out there listening, I mean, whether you are a seasoned investor, whether you're working a 9 to 5, but you've saved and you have something, some sort of a little bit of an, nest egg kind of just sitting there, and you want to do something with that. I think you do need to get in touch with Jeremy. You need to get in touch with the folks over at Bedrock, because they really are going to help guide you, as, as the stewards that they are, through what could be, your first turnkey investment, many more. Maybe it's your 15th, it's your 200th. But if you're looking for good folks to who are really invested in your success alongside you, then I'm glad you showed up to this episode. So, Jeremy, it's really been a pleasure. I could chat with you forever, actually. And I love the passion. I love all the years of entrepreneurship, different business experiences, different industries that you bring, that you've really like folded in to Bedrock. It shows. So we're excited to see what is to come. And for those who are listening, if you haven't checked out their YouTube channel, they have a lot of amazing resources on there. Any closing words for us, Jeremy?
I realize I didn't answer your last question correctly. You said, how much does it cost to invest?
Oh yeah, actually, that's a great. I would love. I mean,
I realize that is
how much does it cost, or who are the ideal folks that you're trying to, to help out? That's actually a great way to close out for us because those should know.
ideal folks. If you're the person in Northern California with a hot trash, like no cash flow, 1031 exchange, you're the ideal.
Bring your problems. Bring your problems
Just
to Jeremy.
because like we can quadruple
Yeah.
we can quintuple the cash flow on a product. We can set a retirement plan in place. We can liquidate them piece by piece. Like that's
Yeah.
the product was built for them. Now, if you're just a high income individual who does not want to deal with the day to day, if you're a doctor, you're a dentist, you're a lawyer, you want to have passive real estate, you want that in your portfolio, we could talk
Mhm.
for hours about like there's some fundamental problems in the market in macroeconomics with our current retirement plan. Like everyone in the whole market is like, yeah, we're just going to go to bonds. We're just going to go to bonds as we get into retirement. And they don't realize that bonds have like an inverse relationship with inflation. Like if there's
Mhm.
inflation and your portfolio is a retirement setup portfolio under modern portfolio theory and you're 80% bonds, your portfolio is going to have its face ripped right off. And you're going to realize way too late, like, wait a second, you mean if interest rates go up, bond value, face values go down, right? Yields go effectively down. Like there's all
Mhm.
sorts of things where you got to have some rental real estate in your portfolio for a diversification play. Now, our real estate, we're buying between 200,000 to 300,000. We're
Okay.
putting 20 to 25% down. And
Okay.
so to get into my game and to get
Mhm.
me kind of to play my game, you need about 70 grand.
Okay.
That can come from home equity. That can come from, a cash value life insurance policy. That can come from cash on hand. That can come from selling some stocks and diversifying your
Mhm.
positions. That can come from a self-directed IRA. So you have IRA funds and it's not hooked to your current employer, you can convert that into a self-directed IRA. You can buy real estate all the time. You can buy a Roth IRA and have it all be tax-free. Bottom line is it takes about 70 grand. Now,
Okay.
depending on your age, it might make more sense to just own 100% cash and act like a super annuity or a super bond, right? That goes up in value but kicks off dividends, kicks off rent every month. That you need to be like 230 to 270, somewhere in there, right? You just buy it outright, own it. Um, the other thing that was really important to understand is I was chatting with one of our mutual friends. I'll just call him
Mhm.
Mike. I was
Okay.
chatting with Mike and he's like, I don't know if like the room that we were in together is good for Bedrock. And he's like, the reason for that is I can't see any professional real estate investors, which is who he and I hang around,
Mhm.
who would pay you the chunk of the appreciation, who that's worth it to them. Right.
Mhm.
And I said, Mike, that the problem is you're not realizing there's two sides of the company, right? There's the find, vet, and buy. And then there's the business management. If you don't need me for the business management, just use us
Mhm.
to vet the hell out of the product.
Yeah.
Right? Like,
Be the asset.
if you know how to manage your own real estate, manage your own real estate. Use me as the guy who's got a pipeline to Jonesboro, Arkansas, and Oklahoma City, and Charlotte, North Carolina. Use me as a person who's bought 5,000 properties and says, hey, this is a trash asset. Don't do it.
Mhm.
Or, hey, I like this one and this one and this one, and use me as a sounding board and just pay our fee to help buy the property and then manage it yourself.
Yeah.
Don't pay us to do the day to day,
That's totally
right?
fine.
And
Mhm.
so that is a really big consideration. Some people hear like the Bedrock story and they're like, well, I don't want to give up that percentage.
Yeah.
You don't have to. What you
That's
can do with
great.
Bedrock is you can buy a product that is vetted as if we were going to be there for the next 7 years,
Mhm.
right? That is vetted as if it wasn't profitable, we were going to be on the hook. You don't have to sign on for that other part. But every property that goes out the door, I don't know what the contract I'm signing is, right? Um, and our contract is really aggressive when it comes to like how much risk we are willing to take. And so
Mhm.
because of that, we're never passing off crap because I don't know what I'm signing on to as far as managing that. And so if it's crap, man, it's over, right?
Yeah.
And
Good
so
for you
that's
guys. Yeah.
the real
Mhm.
big consideration I would say is like, hey, yeah, our ideal client, anyone who wants to get in real estate,
I love that. Mhm. Mhm.
depending on their level of like
Yeah.
how involved they want to be, it's going to be how ideal our services are.
Yeah, and
Yeah,
how I guess are they, yeah, what amount of the spectrum of services they actually partake in, right?
yeah, and everything's a la carte. We have some clients who
Mhm.
just buy with us and they're like, "Hey, could you set up my LLC this time and quit
Mhm.
claim the property into the LLC for me?" We're like, "Sure,
Sure.
this much money." right?
Yeah.
Some people say, hey, could you just give me annual reporting services and can you just handle
Mhm.
the bank account? And I'm like, no, it's impossible. Like
Right.
there's some things that go together because they go together. But the
Yeah.
bottom line is we love the business.
Yeah.
Single family real estate can be obnoxious. It can be really a headache. And I realized way back when I started the company, I'll just sell aspirin. Like
Yeah.
I don't hate managing single family real estate. Like my team doesn't come
Mhm.
to the work every day and just bang their heads against the wall because it's
Mhm.
a little obnoxious. It's like, no, like I've hired people who quite like the work
Mhm.
and
Doing? Yeah.
we're in the business of making it easy for people who don't want to spend their life that way, but who want the asset type.
Yeah. Well, I love that. Well, thank you for being here with us. It's really lovely to connect. You guys are up to some exciting things. And I mean, I figured by the next time I talk to you, there'll be another 5 businesses that have been launched. So I'm glad we got to talk about Bedrock today
You know,
before you get,
I just made some major financing decisions with Bedrock. I'm going to be focusing on Bedrock. Here's the last thing. You asked me two
Yeah.
questions and I didn't get to this one. What else can people follow? The
Mhm.
YouTube channel is just Jeremy A. Watson.
Great. Hmm.
And on the YouTube channel, I basically launched that whole channel just to give back as much as I could on entrepreneurship and investing. And we have just a ton of stuff on there talking about like why real estate's better than gold. We
Hmm.
did a bond thing the other day where we talked about the inverse relationships of bonds and
Hmm.
inflation. We did a whole hour-and-a-half webinar the other day
Love
talking
that.
about
Yeah.
yield and inflation and real estate 30-year fixed mortgages. We have 23 cars and a Turo fleet, so we have rental cars. That
Mhm.
part of the channel is kind of blowing up because we just talk about the economics of that business and
Mhm.
we're rehabbing a $2 million huge house on a lake. We share kind of that process and that journey and the finances and the
Yeah.
economics and the risk position. And so the YouTube channel may be the best thing your people can find from this
Mhm.
conversation. Because if you ever want to just listen to more of this, talk about all the other companies and all the life advice. Like one thing my dad told me years ago changed the way I spend money fundamentally. And
Mhm.
so if you want just more of this conversation, which is just like how do you end up thinking about life when you've started 30 companies? Like that's the YouTube channel. It's Jeremy A. Watson at
Okay.
Jeremy A. Watson. And so that may be a super good resource just to get more familiar with me, more comfortable with what we're doing.
Yeah, that sounds great. So for some more insight into who Jeremy is and some of the different ventures he started, yeah, check out the YouTube channel. And thanks again, Jeremy, for being here. It was a blast. And again, I'm just going to keep thinking of slinging the crete. So, um,
Just go out there and just buy yourself a screed and sling the crate, MJ.
sling it, baby. That's it. So, till the next time, my friend. All right, be well.
Thank you so much, MJ.